This is the MTPredictor weekly market update for September 1st. So I hope you all are enjoying, at least those in the States and Canada, enjoying the long holiday weekend here. Do an abbreviated update as the markets will be closed on Monday, at least the U.S. markets, and will reopen on Tuesday. There's a full slate of economic data this week starting Tuesday with your ISM numbers. You're going to have the beige book on Wednesday, the jobless claims on Thursday, and employment numbers on Friday. So should be an interesting week, and the Fed obviously will be looking closely at that employment situation. So here's the S&P, the futures contract here, and again, we know we went wave 5 up. That's 1700. We were anticipating that back when we were in wave 4, and we projected the wave 5 target up. That we should rally into that, at least the minimum wave 5 target. At that point, we did get a decision point sell signal with this red seller's candle that tells us the sellers were now overcoming the buyers in the resistance area, and typically we would see a correction back to this wave 4, what we call DP, or decision point. And so we've achieved the 100% initial risk line, and as we talked about last week, if you are short, whatever form you're short in, whether it be options or whatever the case might be, the ETFs, you can move your stop to break even. At this point, you'd be in a risk-free trade, and we'll just see, because if it's either going to play out, we'll get a move to the downside around that 1534, 1535 area. If we begin to rally from here, again, a lot of stuff going on, overseas, here at home with the Fed and tapering or not tapering. But anyway, if we do get a rally here, it's okay to take the stop there. And if we don't exceed this prior wave 5 high, then we'll have a potential wave 1 down and a wave 2 here. Since this may be a significant high, we could look at this as a potential wave 1, wave 2, and we'll project a big, large wave 3 down. But we'll see how this goes. Anyway, in a good position there. We'll just take a look at the Dow on the weekly chart, and you can see the same pattern there, 5 waves up, and the correction's begun. Again, you've achieved the 100% initial risk line. So either we get down to that 14,317, we're trading around 14,868 here. Another 500 points plus, and we could see that target. If not, okay to protect yourself there, because again, this could be a potential wave 1, a corrective move into wave 2, and project wave 3 down. And so if we can take a break even here, you may get another opportunity to get short on that. Let's take a look at the bonds here, because we know the bonds, as we looked at, went wave 3 down here, and let's project up wave 4 using the tools in the software here. Just a couple clicks, and that gives us the wave 4, which comes in around 137.12, right in that area, 137.10, 137.12 area. So we'll see. Here's your trend line supports. Again, I'm going back here. Let's go back to, I think this will go back to 2000, 99, 2000. All right, so this longer-term trend line support there, you can see we've had spikes up in the bonds and then pullbacks to the trend line support. Again here, a couple of touches here, and again here, and so we're close. We may get the rally into the wave 4, and then wave 5 down should take us to the shorter-term trend line support here. All right, so we'll see how the bonds do. Again, there's going to be a lot of action here probably, with the market waiting to see whether or not the Fed is going to be tapering or not tapering, or if there's going to be any kind of date on that. Anyway, so that's kind of up in the air, and so we'll see how this continues to progress. Gold here on the daily chart, we did get a sell signal on the TS4, which is an ABC corrective move here. We can just put the analysis on, and you can see the entry there, 14.13.10, the target there at 11.47.60, which is quite a healthy target, 12.6 times your initial risk. It has achieved the 100% initial risk line there, so again, you can have your stop at break even. We'll see how that plays out. But on the, let's look at the, well, I'm going to go actually to, let's look at silver. Well, I've got this up. Silver, we'll look on the weekly chart, and I hope the analysis is still on here. It's not. Okay, well, silver is in a potential, or it's in a wave 4 here. So we did achieve wave 4. Right, as we were anticipating when we projected that up, that we would get that rally into wave 4. We did end the week with a red sellers candle that told us that the sellers were overcoming the buyers by the end of the week. And then let's just project down wave 5 now and see where that target comes in. Alright, so the minimum wave 5 target looks like that'll come right around 1750, 1760 level. And so if you were going to do anything there, let's see what the risk reward looks like. So just about twice your initial risk to the target, so that would work. And this particular setup on this account would be for 2 contracts, risking only $270 to make a potential $530. Again, small control risk, a larger reward. Again, whatever size account you have, the software will adjust your position size accordingly. But we're always going to look for a reward side of the equation that's at least twice the size of our initial risk. Now, we did talk about the potential that we could see a short squeeze here, because this was the area. Oh, there it is. Well, we had this trend line, this descending triangle here, the break here, and so this is the area where a lot of speculators were getting short on the break there, and now that it's pulled back to that area, we'll either get this more selling coming in and we'll sell off to that wave 5 target to the downside there, or if we get any buying pressure coming in, it may create a short squeeze. And if we just, I'm going to just take a decision point off of wave 2 there, and that would put it right around the $36 level would be the next major resistance there. So we'll keep an eye on that. Again, anything you do, low risk, high reward, and we'll see if we do get another test of those lows again, and maybe then if the bottom isn't already in, maybe it's in there, and we'll look for a correction. If it does come back into one of these levels, that 1760, the typical wave 5 will be around 1440 or so. Then we would anticipate we get a correction in this area back up into the wave 4 DP, which is going to come in somewhere in this area. So we'll keep an eye on that. Dollar index, this was the daily chart. We came into that decision point resistance from the weekly chart, and so the trend, which was up, we anticipated here would become a trend in the downward direction. And here's your next major weekly support, just above 80, and things kind of going sideways there. And again, on the weekly chart, there's those resistance and support from the weekly chart there. That's okay. Google here. Google on the daily chart just made this 5-wave pattern down into the minimum wave 5 target area there, and the typical correction would be this wave 4 DP here, which would take it back up around 880. Let's see, get that on there better. Right, 880, 150 or so is going to be that level there. Here's your typical wave 5, so it could, as we get some strength on the STF here to the downside, so we may get into that typical wave 5 before we get a correction. But on the weekly chart, you know, Google has gone, you know, went wave 5 up, and so again we're anticipating a correction back to the weekly wave 4 DP, but this weekly fall off here has unfolded as a 5-wave pattern down on the daily chart. So it's potential we see some more downside before we get a little correction here, which may end up being maybe a little wave 1 into a wave 2, and then we could project wave 3 down and see where that comes in. And here's your weekly decision point. Let's just looking at CELG here. This has had a fantastic run up. This is the weekly chart, but it did come wave 5 up here, and again, typically you get a correction back to this wave 4 DP. But on the daily chart, here's that weekly wave 5 high area. So this could be a significant high, and this could be a potential wave 1 with an ABC correction into wave 2. That's what the TS1 sell signal is. The red sellers candle. Sellers were overcoming buyers on Friday, and so instead of looking for the minimum wave C target here, if this is a potential 1 into 2, we'd be playing for the typical wave 3 target to the downside, down there around 114.07. Again, small risk, high reward, and if you achieve the 100% initial risk line there, now this hasn't been entered yet, it'd have to get down to 139.27 for it to be an executable trade, and so we'll watch and see on Tuesday what happens there if it does hit that level first, and if so, that would take that in, and there's the target down there, wave 3. So interesting little pattern there. Alright, so we'll leave it there. Again, a lot of economic data that's going to be important this week to watch. Again, stuff happening overseas with Syria, and we're going to have to see how that all unfolds. And so keep your eye on things, and we'll pick things back up next Sunday. Have a great rest of your trading week, and we'll see you back then.